the Very Good Food Company. In my recent portfolio update, I did share that I sold my small position in the Very Good Food Company. This video, I'll go into their recent earnings and more detail on why I sold. I am still watching, could potentially buy back in if I felt the downside risks were lowered, but definitely still on the sidelines. Make sure to subscribe if you get value out of this video. My channel, The Paper Bag Investor, I'm looking for high conviction, multi-bagger investment opportunities, trying to look from many angles, research deep, then invest big. Using this approach, I've done about a 29% compound annual growth rate since 2009. And if you're watching this, please hit that thumbs up. So there are two key risks for the Very Good Food Company that I've harped on since I've followed this company. They are, number one, can they even scale production? Can they scale up production? That's a difficult task in itself, especially to the ambitious plans, production plans that they have talked about and that they have been aiming for. And the number two, will the product sell at scale? Even if they do produce large amounts of product, will the product sell at scale? If either of these, number one or number two, have any kind of issue, it's going to be a massive failure, their grand plans. Here are their financial highlights from their recent earnings letter. They had about $4.3 million in revenue from this last quarter. Pretty good, great growth year over year, but not really the amount of growth I was looking for or hoping for. I really thought Q4, I was hoping at least that Q4 really would have massive growth especially in comparison to a year earlier, even the quarters before it. And the question really, I guess I kind of wonder here, if you take this number or these numbers, how much product did they really produce in Q4? Because that number one risk, can they scale production? That's really been the biggest challenge. It's seemingly the biggest challenge for the Very Good Food Company, is being able to produce enough product. So how much did they actually produce in Q4? Well, if we look at their e-commerce sales, $3.3 million in revenue, and they average about $14 a pound. These are all Canadian dollars. $14 a pound, that works out at 236,000 pounds. And then wholesale, they average about $7 a pound in retail, so 781,000 there, and 111,000 pounds wholesale. And then shop, they sold, if you take $177,000 in revenue and you divide that by about $14 a pound, assuming again they get that same kind of rate that they sell direct, that e-commerce rate, $14 a pound, it works out to about 13,000 pounds of product. If you add up these three numbers, you get about total production 360,000 pounds of product. Doesn't sound too bad, right? How much do they produce in Q4? About 360,000 pounds. But if we look a little deeper, we think about, okay, how much did they actually produce on a daily basis in Q4? That's what I want to find out and kind of see. So if you think there's about 13 weeks in Q4, and we're going to kind of take this the most conservative way, the way that paints the best picture for Very Good Foods possible. Let's assume 2 weeks are just taken off for Christmas. Maybe they took vacation for 2 weeks, and all the staff at the facilities, production facilities, took that time off. 2 weeks are gone. And let's assume 5 days a week only they work. There's no extra shifts on the weekends, so there's only 5 working days per week. If you take 13 weeks, subtract 2, you have 11 left. Multiply by 5 days, you get 55 working days. 55 working days, okay, in Q4. And you have 360,000 pounds divided by 55 working days. You get about 6.5 thousand pounds of product produced per day. Now, of course, there's a difference between these are sales numbers that we calculated before to get to about 360,000 pounds of sold product. But there could be a difference between that and what's actually produced, and that could be even a lagging indicator. Maybe some of what's produced in Q4 would be sold now in Q1 of this year. But overall, since the story with Very Good Foods is they've been heavily production constrained, I think it's safe to assume that most of what they produce they would have sold or would have been sold. You would think, at least. So in that case, this is probably somewhat accurate, and they're only at around 6,500 pounds per day total production. This is odd because in their production update video It goes back to November 2nd of 2021. Management said they were at an average of 13,000 pounds a day and wanted to target an average of 40,000 pounds a day in Q4. We'll play the video.
Line 1 at Rupert is humming along and is currently operating 5 days a week with 3 shifts per day. We are now producing an average of 13,000 pounds per day, but we're not stopping there. Line 1's ramp up is expected to continue into the fall as we target 40,000 pounds per day on average in Q4 2021 and gradually increase to an average of 60,000 pounds per day in Q1 2022.
This is frustrating to me because this was a quarter I expected a huge jump in sales. Like, it really has to aggressively ramp if we want this thing to fly, if we want this business to be successful and their valuation to make sense. If they could execute, that's what we were expecting. But going back to, risk numero uno they talked about, 2 risks for the Very Good Food Company. The first one, can they scale production? They're clearly having some production problems and problem scaling. And if you go back to Elon, what he often says, prototypes are easy, production is hard. I think that's a great point that even applies here. So they also give a Rupert production update. Rupert facility is their main facility that's in Vancouver, their main kind of ramp. I've talked about the most important facility. The success or failure of the company hinges on this one. They want to ramp it up to 37 million pounds, which is over 100, is somewhere around 100,000 pounds per day, 365 days per year. 37 million pounds. It's a ton versus what we're talking about, 6,500 pounds in total production. What they're kind of somewhere in that ballpark is what they did in Q4. So just barely anything compared to what they're hoping to actually do. But they talk about here, it's just interesting. They said line 1 was commissioned April, began production in June, though really it hasn't scaled up hardly at all. But then the second production line at the Rupert facility is planned to be commissioned in 2023. So they're not planning that line until 2023, which, makes sense because line 1 still, maybe each line does 50,000 pounds a day and they're at 6,500 or somewhere in that range. They have a long ways to go just on line 1. Of scaling that up. And this was interesting if you contrast this note from what they did in the previous earnings report. They talked about operations team is continuing to ramp production from line 1, achieving a key production target of 40,000 pounds produced in a single day in Q4, and now working towards a milestone of 60,000 pounds produced in a single day, which is targeted for Q1 2022. Expect this additional capacity to support the increasing demand for our products, $14 per pound, and $7 wholesale, e-commerce and wholesale, those numbers there. And then they talk about line 2 wants to be commissioned in Q3 2022. So this year, Q3, production starting at the end of this year, and it was originally planned to be commissioned in early Q1. However, due to delays, COVID delays and excuses. So line 2 is already supposed to be commissioned right now. Like commissioning probably just about done. It's already April. And now they're talking about, if you go back to the slide before, it's planned for Q2 2023. So it's kind of vague. Could even be the end of 2023. Really pushed out there. So not great. It really shows, really highlighting how the execution has been very poor in trying to manufacture product is my is my take on it. Patterson production update. This is a facility that's down in California that's even supposed to do even more, a bigger part of their ambitious plan, sell mostly to the U.S. market. It's supposed to do nearly 100 million pounds of year per product. So almost, 2.5, 3 times as much as the other giant facility that we just looked at, the Rupert facility, and have 3 or 4 production lines if they're successful in that. But then they sort of pat themselves on the back here and say, the company began food production on commercial-grade kitchen equipment in order to fast-track the production of Taco Stuffer, one of Very Good's most in-demand SKUs. Testing of Taco Stuffer on this commercial-grade kitchen equipment was completed in November, and saleable production started shortly thereafter. First of all, I want to say it was probably very foolish of them to have 2 huge facilities they're leasing out at the same time and trying to ramp at the same time when you don't even have all the learnings and bugs worked out of building the first one up to really see how your product can be built at scale. So probably a very big strategic mistake to have 2 at the exact same time already going. But then this kind of frustrates me. I remember the email came out back in the fall. They're talking about, we started making Taco Stuffer on the commercial grade kitchen in the Patterson facility. And I want to put this in perspective of why, or I read that, I found that frustrating. And let's put this commercial grade kitchen fast tracking of production in perspective. Here it is, okay? Maybe 100 pounds, maybe they can do 100 pounds per hour produced from the kitchen. So you just imagine like a hotel kitchen or something, like a commercial kitchen. There's a small team of people, I'm assuming, and maybe just by hand they're mixing things and blending things and mixing and measuring things out and processing things and bagging and packaging things. Maybe this team of people could do 100 pounds per hour. That's still, 800 pounds a day. That's a lot. So that might even be generous, 100 pounds per hour from a little, kitchen. This is versus 98.5 million pounds per year is their goal for this facility. Divided by 365 days, divided by 24 hours a day. That's 11,200 pounds per hour every day, all day, nonstop for an entire year. That's no breaks. That includes any cleaning, any maintenance built into that rate. 11,200 versus your 100. You divide those out. It's less than 1% of the total facility production that you're talking about here. I'm sure it's less, probably even lower than this number, given the way we calculated this. So it's a drop in the bucket. It's barely worth anything, but they're kind of patting themselves on the back about, the Patterson facility is going great. We got the commercial grade kitchen, crew making the taco stuffer for it. Pretty frustrating for me. Then they also, another sort of poor execution or example of that is the cultured nut. With respect to the cultured nut, the success of the cheese products was significantly below the original forecast made at the time of acquisition, and the products under development at the time of acquisition were also determined to have a lack of innovation as compared to original expectations. So it's, again, another sign of really poor execution by management, that they bought this company called the Cultured Nut, and then it's like they didn't do their proper due diligence. I mean, you could go buy the products from the store. I'm sure they met with ownership and staff at the Cultured Nut before they made the purchase transaction. And then after the fact, they come back and say, the products really weren't that special, really weren't that innovative. So again, another poor example of execution. Then executive compensation, another area where you could have some red flags. Executive compensation, even though execution has been very poor, even though the company's losing lots of money, has existential risks around it. The executive compensation as a whole has risen dramatically from last year to the year before, even though, again, execution really wouldn't warrant these kind of massive compensations, I would say, or large compensations. And on top of all these red flags and frustrations I felt with this company, on top of all of that, they now have a liquidity risk. And they say, as of the date of this management discussion and analysis, we believe we have sufficient cash on hand and available liquidity to meet our future operating expenses and finance our capital expenditure and debt service requirements for approximately 3 to 5 months. Company is currently evaluating finance options that will minimize dilution in order to extend its cash runway. This is obviously a huge existential risk to the company. I'd say the risk of bankruptcy is probably higher than it's ever been. They're going to try, obviously, and trim all their expenses as much as they can so they can hold on. And if they can do that, maybe they can raise some money through some loans, but I'm assuming the interest rate on those loans would be very high. And if they were to raise money or try and do sort of a capital raise, that would dilute the stock quite a bit since they're at such a low stock valuation right now. So really tough spot to be in. And then there's also a management risk. This news just came out today that the Mitchell Scott, the CEO, was fired, and then also his other co-founder, James Davidson, who was sort of the chief chef, who also resigned. So pretty difficult spot to be in, even management-wise, where the company is going to go. Could they find the right leader for the company to pull them out of the spot they're in? Overall, it just seems they are struggling to ramp production. It's not clear that they can even sell at scale if they do, since their selling, general, and administration expenses have also continued to rise aggressively as their revenues have risen the amount they have. So it's not clear also why management, it's very frustrating to me, and not clear why they would send out a video hoping for 40,000 pounds a day and then, in the quarter, and then only doing something like 6,500 pounds per day. super frustrating to me. It also seems like management's taking as much compensation as they can. Spending continues to explode. As I mentioned, cash situation seems pretty perilous. Risk of bankruptcy is at an all-time high. It's really sad though, because the product seems to be liked in the marketplace. And I've talked to people who are vegan eaters who try this versus other available products. People really seem to be attracted to and enjoy their products. And their overall strategy of having like wholesale sales, online direct sales, also certain selected restaurants so they could try new products, is a complicated kind of maybe more complicated with some more execution risks. But I think as a long-term strategy was a good strategy if they could be successful in it and executing that strategy. But for me, there's just too many red flags, examples of poor execution, outright possibly lying or deceiving investors by management, that I am definitely out on this one and will continue to watch from the sidelines. Love to hear what you think of this company, what you thought of their recent earnings and the firing of their CEO. Let us know in the comments down below. Subscribe if you got value. You can find me on Twitter at PaperBagInvest. And remember, it's in the bag.